Very good. We'll do problem number 3. Please be quick. A, B and C are partners sharing profits and losses in the ratio of 3:2:1. Their balance sheet on 31st December 2007 was as follows. Capital accounts of ABC, reserve and P&L account and creditors. Assets, cash at bank, debtors, stock, plant, building, furniture, etc. is given to you. C retires on that day and subject to following conditions. Goodwill of the firm is to be valued at rupees 3,36,000. Building is to be appreciated by 20%. Plant and furniture are to be depreciated by 10% and 15% respectively. And provision is to be made for doubtful debts at 5%. Goodwill of the firm is to be valued at 36,000. Building is to be appreciated by 20%. Plant and furniture is to be depreciated by 10% and 15% respectively. Provision is to be made for doubtful debts at the rate of 5%. Next, A and B are to bring in cash if necessary in their profit sharing ratio to pay off C's dues on retirement and then leave a sum of rupees 10,000 as working capital. So A and B are to bring in cash if necessary in their profit sharing ratio to pay off C's due on retirement and leave a sum of 10,000 rupees as working capital. Prepare revaluation account, partners capital account and new balance sheet as on 1/1/2008. Please open all the accounts quickly. Please open all the accounts, necessary accounts. Revaluation account you'll open. No need of opening any reserve account or goodwill account. Reserve is there.
Yes, sir.
But I think not needed. We can directly pass one entry and close that account. Profit and loss account is also there. Then bank account and then balance sheet after retirement. Please be quick. Revaluation account. Cash and bank account. Partners capital account. Who are the partners? Please tell me. Stop talking. I did not give you time to talk. Even a moment you start telling. It's as if for the last 12 hours so many ideas are filled in your mind. Unless you get out of it, no, you will not be able to digest your food. It seems as if like that. Balance sheet. Please be quick. Always start with opening balances. Capital accounts of the partners brought down. Tell me what are the balances? 45, 35, 25. 45, 35 and 25. Bank balance 3,500. Bank balance 3,500. Now let us start. See, before we start, you can see some accumulated reserves in the balance sheet. Reserve 15,000, P&L account 12,000. That reserve and that profit and loss account balance has to be shared among all the partners in their old profit sharing ratio. So reserve is how much? 15,000. It has to be shared among ABC in their old profit sharing ratio. Entry will be reserve account debtor to A capital to B capital to C capital in old profit sharing ratio. So right here by reserve. How much? I have passed an entry reserve account debtor to partners capital account. Similarly, profit and loss account, you can see some credit balance. How much is there in P&L account? Again, there is a credit balance of 12,000. You have to share it among all the partners in their old profit sharing ratio. P&L account debtor to all partners capital account by P&L account. How much? 6,000, 4,000 and 2,000. Now read the adjustments agreed. C retires on that date subject to following conditions. Goodwill of the firm is to be valued at rupees 36,000. Now see the old profit sharing ratio given to you 3:2:1. And what is the new profit sharing ratio agreed between the partners? Who said? Nothing has been given. The new profit sharing ratio is not equally, boss. They will continue to share profits in their mutual profit sharing ratio as before. So when ABC was there, they were sharing 3:2:1 ratio. C goes away. So now how many are left? A and B. Okay. They will say, boss, he has left. No. Earlier what we were doing, if there was profit, we are doing it, dividing it into 6 parts. He used to take one part out of it. Remaining 5 parts, I used to take 3, you used to take 2. So between you and me, if there were 5 parts, I was taking 3 and you were taking 2. If he has gone, even now, if we get profits, we will make it into 5 parts. I will take 3, you will take 2. That's it. Are you able to understand? So whatever C is sacrificing, A and B will share it in that ratio only, 3:2 ratio only. Are you able to understand? When new profit sharing ratio is not given, you have to assume they are sharing profits and losses in their mutual profit sharing ratio as before retirement. Okay? So write down entry for goodwill. Entry for goodwill. Entry for goodwill. Who are the gaining partners now? A and B. A's capital account debtor, B's capital account debtor, to C capital account. How much is he sacrificing? 36,000 into 6,000. This 6,000 will be shared among A and B in their mutual profit sharing ratio, 3:2 ratio. Below that you write, when new profit sharing ratio is not given, we assume old profit sharing ratio between A and B will continue. When new profit sharing ratio is not given, we assume old profit sharing ratio between A and B will continue. C sacrifice would be shared by A and B in 3:2 ratio only. C sacrifice is assumed to be shared between A and B in the ratio of 3:2 only. Give posting now. Next, building is to be appreciated by 20%, and the problem doesn't say that we are not going to show revaluation in the balance sheet. So we can safely show revalued figures in the balance sheet. Building is to be appreciated by 20%. Building value is how much? 50,000 into 20%. How much is it? 10,000. Entry is building account at R2 revaluation by building. Next, plant and furniture are to be depreciated by 10% and 15% respectively. Plant 40,000 depreciated by 10%. Revaluation account at R2 plant account how much? 4,000. Plant account how much? 36,000. Furniture is depreciated by how much? Furniture is depreciated by 15%. 4,000 15%. How much is it? 600. What? Furniture, how much? 3,400. Plant value have reduced. Furniture value also have reduced. Provision is to be made at doubtful debts. For doubtful debts at 5%. Debtors 30,000 to 5%. How much is it? 30,000 to 5%. It is 1,500. So what is entry you write when you have to provide for bad debts? We don't have P&L account now. Take the help of revaluation account. What is entry pass? Revaluation account that are to provision for bad debts. How much? Debtors, inner column how much? 30,000 less provision 1,500, outer column 28,500. A and B are to bring in cash if necessary in their profit sharing ratio to pay off C's dues on retirement and leave a sum of rupees 10,000 as working capital. A and B are to bring in cash if necessary in their profit sharing ratio to pay off C's dues on retirement. So A and B have to bring cash so that we are able to pay C whatever is due to him on retirement, and we should also leave 10,000 as working capital. That means after you discharge C's capital balance, still 10,000 rupees should be left in the bank account. If there is a shortfall, that shortfall will be filled up by A and B in their profit sharing ratio. Okay, we can do that step later. Let us first close the revaluation account. 10,000 to A, to B, to C. 1950 gift posting by revaluation 1950 1300 650. We have to discharge C on his retirement now. Find out how much credit balance is there in C's capital account.
36,150.
Leave one line place and then draw the box. How much is there in C's capital account?
36,150.
27,500, 29,500. 36,150 is there. Credit balance, credit side is more. We have to write a check now in favor of C. We have decided we are going to set this account. What is the entry you write when you issue a check to C? C's capital account, entire to bank account. C's capital account, entire to bank account, 36,150. Bank account is right by C's capital, 36,150. Did you all write? Now, we have to pay off C. After paying off C, we should have a closing balance of 10,000. This is desired closing balance. You will fix that closing balance. By balance carried down 10,000. Now tell me how much shortfall is there? 36,150 plus 10,000. 46,150 minus 3,500. How much is there?
42,650.
So 42,650 is the shortfall. Partners have decided to bring the shortfall in their profit sharing ratio. So go to working note. You write. Write down. Cash required. Cash required for payments 36,150. Add. Cash required for payment 36,150. Add. Desired cash balance for working capital 10,000. Cash required for payment 36,150. Add desired closing cash balance 10,000 for working capital. Desired closing cash balance for working capital 10,000. Total requirement. Total requirement 46,150 less available opening balance. Available opening balance only 3,500. Available opening balance 3,500. Shortfall 42,650 to be shared in 3:2 ratio among A and B. To be shared, or you can write to be brought by A and B in the ratio of 3:2. How much?
25,590.
To A's capital 25,
1,590.
to B's capital
17,060.
17,060. Give credit. What? No. 3:2. In this profit sharing ratio, by cash 25,590, 17,060. Total. Now cash balance will tally if you see now. Cash account will tally now. Give credit to cash account, capital account of A and B now because they have brought money. Tell me what is the balance left? A capital account. Closing balance. Total of the credit side.
86,040.
Oh. 1 lakh. Closing balance. How can it be? 3,600 no. 1 lakh. You have included this 25,990. 86,040. 8640 minus 306,3600.
82,500.
82,440. Closing balance. Now show the capital account balances. A's capital account 82,440. See, my numbers are different.
Sir, 59,960.
Now show the closing cash balance also in the balance sheet.
Balance sheet total 1,60,900.
Creditors.
20,500.
How much you have creditors? 20,500. Which account I have left on the asset side? Stock, I think. Stock 25,000. Stock. See the balance sheet, is it tallying?
Yes, sir.
1,62,900.
These problems were already there in your CPD level, but I doubt how many people would have solved it.
Meet with them, sir.
In intermediate, you have admission, retirement, death.
Yes.